Hey guys, this is Gustavo David Ortiz with the Mathison-Klein Group at Keller Williams. So today we had an amazing webinar that talked about how to buy a home with no money down. And we did that with Jennifer Micklos over at Movement Mortgage. She's the branch manager there and had some really great insights on how you can buy a home with no money down. Some great programs that are available to you, and some of them have some restrictions, some of them don't have very many restrictions. So it was just really great to learn about what that process looked like and how realistic it is for you to consider buying a home without any money down. Anyways, we did have a little bit of an audio issue early on in the program, and of course, for those of you who did come in, and experience some of that, I do apologize. We were able to make that adjustment for the audio issues early on, early enough that we were able to actually still capture all the great nuggets that had to do with these programs. So the things that were missed, just for reference, were just some general recommendations that we had for you as a buyer on your home buying journey. We did come around to the end and discuss some of those recommendations, so to make sure that we covered them because we thought that they were important for you to know. So without further ado, I just wanted to let you know that what happened with that webinar, and that we definitely have some really great information for you to listen to. So I hope you enjoy the rest of the show. All right, talk to you guys later. Peace. Okay, how about now? Can you guys hear me now? Is that any better? Looks like everyone's having trouble. Can you guys hear me now? I just changed the microphone. I'm hoping that yes. Yay. Okay, awesome. Sorry, guys. All right, so we're gonna have to start the whole thing over.
Thanks for hanging in there all this time.
All right, so all right, perfect. So let's quickly just briefly cover the USDA just to make sure that we cover that.
So just to recap,
okay.
The USDA program is a program in certain areas throughout the country, usually a little bit more rural, but it's really everywhere. The property itself has to be located in an eligible area in order to use this program, but it's a zero down program. And the closing costs can be paid by the seller. It can be a gift from a family member. We can talk about options for that. And it's a very low monthly payment in comparison to some of the other programs that are out there. So it's a great option. There is a household income limit. So they look at the entire household and how much money that household is earning. Mm-hmm. If you're over that limit, then you can't qualify for that program. And it does go up depending on the number of people that are in the household.
Okay. So this is a really great option to move to an area that's a little bit more rural, mm-hmm. and if you actually have some income restrictions yourself, like income limitations yourself,
right?
This might be a good program for you to consider.
Mm-hmm. So generally, it's about $86,000 in our state or in our area.
That's
yeah,
pretty good.
And that's a pretty good amount of income for most families.
Absolutely.
So.
Okay.
Mm-hmm.
All right. There you go. So if you guys have any questions, please go ahead and make sure you type them in, and that way we can go ahead and try to answer them as best that we can as we go through the process. So apologize that the audio wasn't working before. We're going to try to see if we can cover everything. The stuff that we talked about before was really just general advice, which we can talk about, individually, with individual consultations. Now is where we just started talking about the actual program. So the USDA Rural Development Program, that's going to be the program number one. Mm-hmm. That's available. It's a zero down program. In other words, you don't have to put any money down in order to purchase a house using this program, which is awesome. Mm-hmm. It's just amazing.
You also don't have to be a first-time homebuyer for it.
Oh, okay.
So it's a lot of people think that only first-time homebuyers can get some of these programs, but that is not true.
That is a great thing to recognize, because that's awesome. Because I know there's a lot of people who they may have owned a home either themselves or with a spouse, and they no longer own, and they think that they don't qualify for a program like this. And this is a really great opportunity.
They can even own one currently, and plan to sell it.
Oh, okay.
Before the new one.
So, there you go.
Or in another state.
So
let's say they're moving from another state to Florida, they can move and do that.
So it's not like I think it's FHA that has the.
Many of the down payment assistance programs for the government will require you to be a first-time home buyer, and FHA has limitations on how many FHA mortgages you can have.
I see. Okay. Mm-hmm. Okay, awesome. So let's go to the next slide. I don't know if does it even work in here? Annoying. All right, so I think even though we can, let's take this down. They will be able to see me switch. Where is it at?
Is that on the left there?
Yeah. All right. So we're going to go to the next slide. All right.
So this is kind of the recap of what we just talked about, that you don't have to be a first-time home buyer. 0 down payment is required. Living in an eligible area in order to qualify. The house you're buying has to be there. And then there's those income limits that we kind of talked about on what your family can earn.
Okay, awesome. And then, of course, as you get a chance to speak with everyone, you can kind of, based on their own circumstances, kind of identify whether this program may be a good option for them or not.
Absolutely.
Okay. Down payment assistance programs. Okay, so this is something that I wasn't made aware of till relatively recently. I didn't realize that this was even a thing. And so I'm very interested to hear about what this ultimately is, what it means to anyone who's buying a home, and how would anyone get it? So just in Central Florida, where I am, there are probably 15 or 20 different programs that are government or state programs that are available that can help with the down payment and closing costs on a new home purchase. So most of these programs do require you to be a first-time home buyer. There are some exceptions if the property's in like a disaster area or if you're a veteran, but most of the time you have to be a first-time home buyer to qualify for them. And you can get assistance from $7,500 to $10,000. Oh, wow. Some of it does have to be repaid. But again, it helps get you in the door and get you to be able to purchase something. Yeah. The programs also do have income limits, but each different program and offering that's out there has different ones. Gotcha. And different criteria for who they're counting in those income limits. So some of them look at everyone in the household and says, if it's a couple and then another adult living there too, like someone's mother or mother-in-law, adult child, if they're all there working, we're going to count all that income. And if you make too much, you don't qualify. Others will look at just the one person who's going on the loan. So sometimes, we may have a husband and wife who are going to live in the house together, but only one of them is going to be on the loan, maybe because the other one's credit isn't that good. And as long as the one that's on the loan's under the limit that's allowed, then we can qualify, even if both of them together earn too much money. Gotcha. So, different programs have different rules on what the income limits are. Okay. So that's something we can help navigate. And these are you're talking about state and like county and sometimes with some municipal programs. Yeah. So the Florida Department of Housing has different programs. There's about 8 different programs, or 10 actually in this area that are through that department that are out there. Okay. So those programs can be a little bit more restrictive in your buying power. And like I said, most of them have to be repaid at some point when you sell or refinance the home. And then there are some additional costs and fees that apply, which get rolled into the closing costs, which are being paid for by those funds. Interesting. The seller can also pay some money towards the closing costs too. So if the money that you're getting in the assistance doesn't cover all the down payment and the closing costs, you can still negotiate and have the seller pay some of it too. I want to touch on that a little bit because I think people don't realize that, and it doesn't happen all the time, but it doesn't hurt as a buyer for when you go into a negotiation, if you're making a reasonable offer, to ask the seller to pay the closing costs. And I have it happen all the time. And sometimes the seller will pay all the closing costs. Sometimes they're only willing to pay a portion of the closing costs. But at the end of the day, and I mean, there's going to be some times where they won't pay any, but it doesn't hurt to ask. And I if I know that my client, they really need the closing costs, but they're okay with making a reasonable offer, then I would say, to keep it simple, okay, well, let's make it a strong offer as we can, and then ask the seller to cover the closing costs so that there's not as much cash on hand that they need coming to closing. Right. And I find that, a lot of the time the sellers, they're fine to pay it. Right. They don't have any problems. Well, I mean, the seller's concerned mostly with their bottom line, right? So if you're going to offer them $150,000 and then you want them to pay the closing costs, then say $5,000, they're really only getting $145,000 now, right? Right. But if you come in and say, you know what, we're willing to pay $155,000 for this house, and if you pay $5,000 towards our closing costs, that increase of your offer going up an extra $5,000 only is going to change your monthly payment like $20, $25. But it reduces the amount you have to bring to closing by like $5,000. Can you go ahead and just repeat that one more time? Yes. Okay. So if you take whatever offer you think is fair to the seller and you add, say, $5,000 to it, it will increase your monthly payment by about $25. So $5,000
Mm-hmm.
and more to this that you're giving to the seller will only make a difference of $25 in your monthly mortgage payment.
Correct.
Okay.
But you take that $5,000 now and ask them to give it back to you as a credit towards your closing costs, reduces the amount of money you bring to closing by $5,000.
So that's what you call leverage, right? Is I knowing, when you have a great team together, this is why it's important to have a great team together, because the lender can identify what the negotiations that the agent is helping you with will mean for you financially. Mm-hmm. So understanding that, hey, I don't have the $5,000 for closing costs, but I can maybe negotiate that if I offer a little more, which only makes a difference to me of about $25 a month, like that's huge.
Right.
And all of a sudden now you don't need as much cash anymore. You just need to be willing to pay, a more reasonable price for the home.
Right. Negotiating the best price can't help you if you can't close on it because you don't have the money.
Exactly. Okay, that's good. That's awesome. That's good to know.
Mm-hmm.
So you guys, now this is kind of what I was talking about earlier with this idea of having a great team in place is and working with a local mortgage broker is banks typically don't have very many of their own sort of programs.
Mm-hmm.
Yeah, they typically use they have some standard stuff that's pretty much what they got, mm-hmm. right? The advantage of using someone like a Movement Mortgage or any other broker is typically you guys as brokers will try to find ways to assist buyers by creating programs like within your brokerage.
Right.
So this is this Dream to Own home loan. This is your program, right?
Yes, it is.
So talk to me a little bit about what this program is about, because it's similar. It's a similar type of like down payment assistance type program, right?
Yep, absolutely. So our goal is to reinvest in communities and to help bring the dream of home ownership to everyone who wants it. And so we came up with a program that allows people to get some assistance to move into their home. You can be a first-time home buyer, or you don't have to be a first-time home buyer. It gives an assistance in the form of a 4%, basically second loan that we at Movement Mortgage fund for the buyer to help cover that down payment gap and the closing costs that they need. So you could come in and buy a house with zero down and get 1% use 1% of that down payment assistance to go towards the closing costs too. Mm. So it's a great program for anybody really who's interested in buying a house but just doesn't have money to use for the down payment. It also doesn't require mortgage insurance, so it can really be a great option for buyers who are looking to keep their monthly payment low, mm-hmm. And not pay that dreaded mortgage insurance that we talked about earlier.
Right. And when looking at like the program like this versus a program that is government sponsored, what would you say are sort of the biggest differences or things to consider when looking at both of these types of programs?
So usually the government programs are going to be a little bit more restrictive in your buying power. Also, they come with more fees. Mm. So these don't have really any more fees. So it doesn't cost a lot extra. It doesn't take a big chunk of that money away that you're getting and having to go towards extra fees that are being added in. So it's a really great option for buyers, and it gives you more buying power. If you're putting looking at one person with the same income and expenses and what they can buy in a home for this program versus a government one, this one's likely to give them a higher price tag.
Gotcha. Okay. Mm-hmm. That's good to know.
Yeah.
All right. Let's go back here. I want to make sure that we're following. Mm-hmm. All right. So
yeah, we mentioned it can be first-time home buyers or repeat buyers. You don't have to be, never owned a home before to be eligible for this program. It also, I mentioned that it's zero down and it gives you 1% back towards closing costs. Again, you can negotiate with the seller to pay the closing costs, and there's that no mortgage insurance and less costs than the traditional down payment assistance like government programs out there.
Gotcha.
So the biggest question that we get from people at this point is really, what if my credit's not good?
I get that all the time.
Yeah. And a lot of people are afraid to talk to us about it because they think that there's just no chance because they've had some credit issues or mistakes in the past that just seem to never go away.
Yeah.
And so that's something that we want to talk about, that it is not unsurmountable to be able to have a plan and to be able to figure out how to repair your credit.
Yeah. And I got to tell you, repairing a credit is not as difficult as you think it is.
Mm-hmm.
So I have good credit now, but I haven't always had good credit, and when I made the decision that, okay, I need to start adulting and actually, get my credit in order so that I can buy a house and I can buy a car and I can actually get a phone that's not a Metro PCS or something.
Mm-hmm.
That I decided to do that. It took me, and I had awful credit. But it probably took me probably about 18 months. And that's only, and I didn't even, honestly, I wasn't even thinking about it. I was just kind of going through the process, right? And then at like month 16 or something like that, or 18, somewhere around there, I decided to just kind of do my annual credit check. You can check your credit scores.
Yep.
And all of a sudden, I'm in the like high 600s, with some, and one score was in the low 700s. And I was just like, holy moly, I have good credit now.
Yeah.
So I think that there is a misconception that if you have bad credit, it's going to take you an eternity to turn it around. And I got to tell you, one, it doesn't take an eternity. It probably happened prior to me checking. That's just when I checked.
Right.
And then the other thing is to get a loan, you really don't need as good a credit as most people think.
It doesn't have to be perfect. And a lot of times people will spend money paying things off that they thought were important, or paying down credit card bills. And those may be really important things depending on your circumstances. But sometimes people will spend all their money doing that and then not be able to buy because they don't have it to use for a home inspection. So, there's got to be a balance of where is the best use of the money that I do have to be able to get into a house. And it's not always to pay everything off. That's not always the answer.
And that is an interesting position because, before I had a full understanding of how a mortgage broker thinks about a person's individual finances, I just assumed that I had to take care of all of my credit issues before I could even go talk to somebody about getting a home loan. And the truth of the matter is, and I learned a lot of that from you, was it's a question about being strategic about the things that you pay off. So instead of, if you have $10,000 in debt, you don't necessarily have to pay all that $10,000 off, but there may be certain things that if you paid those things off would make a much bigger impact in your ability to actually get that mortgage.
And there are some things that you can pay off that will hurt your credit score.
That's interesting.
Will actually cause your credit score to go down if you pay off some things.
Okay.
And a lot of people don't know that either. They think they have to go pay off all the old collections that they have. And they'll come back and say, okay, I paid it off, and we'll go to pull their credit and it's gone down.
Right.
So, there's a lot of misconceptions out there, and you can never start too early. Like you said, it took 18 months or maybe 12 months to get your scores up. A lot of people just keep re-signing that lease. Once you sign your lease, if you think you don't want to do it again, just call a mortgage lender. Let's get a plan in place so that by the next time your lease comes due, what do I need to do? Do I need to save anything? What accounts to pay down? How to build it? It might be opening new credit to build up your scores. So there's lots of different tools that we use and that we can employ to help people to get on the path that they need to go on. And just talking to somebody, and you can never do it too early.
Now, this is a big part of kind of what your business is, right? Is chatting with people really early on, and they're not necessarily ready to rock and roll and find a house tomorrow. And they do need some assistance figuring out what it is they need to do to fix their credit, or, just position themselves to be able to buy a home.
Right.
And part of what the consult that you do with your clients is, in my understanding is that you'll sit down with them and really kind of, because you guys have like a credit person in your.
Yeah, we do have an expert that will help us to review their report if there's something maybe a little bit more in detail than what I can give them, and give us a better plan.
Right. And then you just kind of create a strategy that really all they have to do is kind of just follow that strategy. And then in some cases, within 6 months or less.
Some even less. I mean, there are sometimes we can say, do this and this, and in 30 days, let's look at it again, and you'll be ready.
Oh, wow. Okay. What is...
And a lot of times people will call me, sorry to interrupt,
No.
and say, I want to do this next year. And then we'll say, well, are you sure you want to wait till next year? Because now you're ready. Here's the plan. Here's what you have to do.
Right. And that's interesting. There's a couple things that tying into that, because I know that a lot of times people feel that agents or mortgage brokers are really trying to get them to make a move now or whatever the case may be. But in many cases, that urgency is not to do with the professional that you're working with, but with the circumstances of the market that are favorable, right? So like right now, a lot of people are wondering whether it's a good or bad time to buy, so on and so forth. And quite honestly, with the biggest thing that a buyer has in their favor is really in your realm is the interest rates are just crazy low right now.
Super low.
So, I mean, we haven't seen interest rates like this for how long?
About 3 years now.
Okay. So, and we don't know what they're going to look like next year. So taking advantage and making a move when you're otherwise ready, and it's just sort of something that's stuck in your mind as to why you don't want to move. That's the reason why you may hear someone say, hey, listen, you guys may want to go ahead and take advantage of that now.
Right. Yeah. And as property values are rising, it takes away from your buying power. So the more expensive the home gets, the longer that you wait, the harder it is to get into the market. Right.
Okay, so let's go to the next slide here. Okay.
Yeah, so this one was just talking about really giving you a path.
We just talked about that. Yeah, so we just talked about that. It's awesome. Okay, so do you guys have any questions? If you guys have any, I know it's a lot of information. We're trying not to overwhelm you with a bunch of information, but do you guys have any questions with relation to, buying a home, getting a mortgage, or anything that's even related to that process? I'm not seeing any questions yet, but that's okay. That's right. Don't be shy.
Everything they need to know now.
I know, right? I want to, I do like the idea of, one of the reasons why I wanted to kind of share this, and I know that you guys, we're also Instagramming live. One of the reasons why we talked a little bit about this earlier with our Instagram live folks, but you guys couldn't hear us, is just some, I guess, general advice that I want to share with you guys if you're considering buying a home. And the thing is there's all kinds of tools out there to help you buy a home. And, that there's Zillow and Realtor.com, and they have all these, and there's all kinds of tools for, what is it called? Those mortgage calculators and stuff like that, which don't trust them. They're awful. But the big thing that I want you guys to take away from this is that it's important, it's critical that you guys find a great team. Now, a lot of times the teams will already be working with each other. So let's say you find a really great mortgage broker. They will usually have a great real estate agent that they can refer to you to do business with because they've done a lot of business with them and they know how the quality of their work, and vice versa, a realtor back to a mortgage broker. So if you do find somebody, just make sure that they've been vetted by somebody. You don't want to get stuck with someone who either doesn't know what they're doing or is just focused on the transaction and they just want to get to the closing table. You really want to make sure that you find a team that's going to be there to help you through the process, make sure that they're working for you, just like the seller has an agent working for them on trying to get the highest price for the home. You can have yourself a representative that's going to help you get the best deal on that home. So
and we were talking about how there's so many nuances, there's so many things that can come up and that can go wrong, that having a licensed professional that's your specialty is working with buyers to be able to negotiate with them, to be able to talk about what happens when something comes up on an inspection, to talk about, anything. There's a multitude. I'm sure you've seen a lot. I've seen a lot of things that can come up, that it's important to have a professional who knows how to handle those situations.
Yeah, and the reason why you want to bring on a great team is, they're all going to be able to help each other and be able to, and ultimately they're there to help you. When you're going into a home purchase, the goal is that you're not doing it by yourself. You're like the CEO, right, of your home purchasing journey, and you're bringing on this team of experts that are going to come and help you through the process. And what's awesome about being a buyer is that, generally speaking, you get the advantage of utilizing all of these experts and whatnot. And the only thing you have to be concerned about is closing costs. And sometimes, in a lot of cases, we can even negotiate those closing costs out. So, and with the zero down program and all these other things, I mean, there's just all these opportunities that exist, and really having a team of professionals to help you through that process is going to benefit you a lot. Whether you use, and I'm not saying you got to use me or Jen, but just please, for the love of all that's
good and holy.
Yes.
Well, I think a lot of times people think that it costs them money to have a buyer's agent, to have somebody to represent them. And they think if they call the name on the sign, that's going to save them money.
Right.
But you know that that's not the case, and it often can leave you unrepresented.
Right. Well, you know what's interesting is the opposite's true. So what happens is if you go and you chat with the listing agent directly, and the agent is you don't have a buyer representative, instead of a discount that you're going to get, what you think you might get, whatever is negotiated is what the seller would probably negotiate anyways. And the only discount that's going to take place is a discount typically to the seller. So the seller gets a discount, but the buyer never sees any part of that discount.
Right. And the buyer doesn't pay the real estate commissions anyway.
Nope.
So it doesn't hurt them to have
it doesn't.
an agent.
It really benefits them. And there we go.
Oh, we're back.
Sorry, guys. Internet's
Can you see us?
Is acting up on us. Okay, so I don't know if you guys heard what we said regarding the
Income.
Yeah, the income limitations. You want to cover that really quickly one more time just to make sure?
So the USDA program we talked about before is about $86,000 for a family of 4, goes up to over $100,000 with a family of 5 or more. That's in our area. The down payment assistance grant programs, the county and the state ones that I mentioned before, they kind of range from the 40s up to the 80s. Again, depends on your local area and your household size, all of those things. And then our movement program has a maximum income limit in our area, which is it's tied to the area median. So it can vary from place to place, but here it's about $88,000 is the maximum that you can earn and still be eligible for that program. So each one has different requirements and different rules on what you can have, and whether it's the entire household or if it's only going to look at who is on the loan application specifically.
Okay. And then you also mentioned, because Lisa had a question about whether or not you could use the home buyer program together, the first time home buyer program. These are programs that you would ultimately go to like a class for or something like that, typically sponsored by the local government of some kind. And then they'll help you with down payment assistance or something of that nature. And then could it be used in conjunction with the zero down payment program? And you mentioned that it theoretically could.
Often, some you can put together, some of them you can't. A lot of times you don't need 2 programs because one program will help you with the down payment and the closing costs. And so you don't need another program. So it really depends on which best for your needs specifically. Is it a program that is only for first time home buyers, or maybe it's not, but it's still the best option for you?
I gotcha.
Then it might be the best one. So we look at everything like what's going to get you the biggest buying power for the least cost.
Gotcha. And that's what's going to be important. Now, we were talking earlier about credit, for example, and the thing that really blew my mind was for as far as you know, what is the lowest credit score that there is actually a program that someone could qualify for?
Well, our lowest that we can do is 580, but I have heard of other companies that will do even lower than that.
Wow.
Now, FHA doesn't really have like a floor per se, but usually the lower the score, they're going to look for bigger down payments. They're going to look for lower, it's going to give you lower buying power.
Gotcha.
But 580 is the minimum that we can do, which is lower than most. Most banks, if you walk into, wouldn't be able to do that below a 640 typically.
Right. Yeah, because they don't want to do anything that's going to be too high risk for them.
Right, exactly.
Gotcha. So that's really great. So, I mean, really what we want you guys to get from this is that there are definitely some programs that are out there that where you don't need down payment, a down payment to actually purchase the home, whether that's a zero down program or a down payment assistance program that exists. And even the down payment assistance programs, there are some government sponsored programs as well as some programs that are sponsored by companies like Movement Mortgage. There are probably other ones out there for other lenders as well. So, being educated on the programs that are out there is going to be very helpful for you. So just make sure that you do some homework. Again, an agent agent is going to help you identify some great mortgage brokers that you can kind of do some compare and contrast with, so that you guys have a good idea of what lenders may work. We like to use Movement Mortgage because they have a very smooth process. We really enjoy how well they take care of our clients. But like I said, it's going to be up to you and what clicks best for you, and who's going to be handling your money and what agent you want to work with. So I
think we have one more question. Lisa looks like she's asking, what's the least? I think probably the least amount of money you can earn to qualify for these programs.
Oh, okay, yeah.
And so unfortunately, that's a question that you have to say it depends, because it really depends on like what somebody's credit other obligations are. So whether they have student loans or car payments or credit cards, or child support.
So this really
all of that stuff gets factored in.
So we're talking now. This starts getting into the question of what's called the debt to income ratio.
Right.
So without getting into the nuances of that, basically how much you make versus how much you have to pay out at the end of the month.
Exactly.
Okay.
Yep.
All right.
And so to say that there's like what's the least amount you can make, right? It's hard. That's a hard number to put on.
If you're making if you're making $5,000 a month, but you spend $4,000 a month, then there isn't any room there. Right. But, if you have very little debt, you could qualify for a very nice mortgage. Gotcha. So. Okay. So that's good. I hope that answers your question. Obviously, if you want a little bit more in-depth a question answered here, this is an opportunity for you. I'm going to put this on the screen so that you guys can sign up. All you got to do is go ahead and go put this up. This is for. All right. So basically, to see if you can buy a home with no money down. So just click on the I want to know button, and what that'll do is that'll take you right into a series, like an app that'll kind of ask you a few questions just to kind of get a better understanding of your particular circumstances, and that way you can go ahead and do that. Let me put it up one more time because I feel like that wasn't up for long enough. I want to make sure that it's up long enough for you guys to click on it.
Remember, there's no obligation. There's no pressure. We're not going to harass you and drive to your work and your house and try to make you buy a house. So we're here just to help and to give you information and to help you make that next step. Right.
Yeah. The goal here is really just so that you guys can be educated. We want to make sure that you guys are empowered and realize that, you have the ability to buy a home sooner than you think. It's not as hard as you think it is. You don't need as much money as you think you do. And if you have the right team, you are going to be able to find a beautiful house that will work for exactly what you need. So like I said, I think it's important for you guys to really take some time and think about really what's more important than how much money you need is the team around you. Because once you have a great team around you, they will help you identify what you're going to need to actually make it logistically happen. And the rest is just going to be figuring out what home is going to fit based on your needs. So I really appreciate you guys taking the time to come out and watch and listen. I hope that we were able to bring to light some good information for you to help you on your home buying journey. I'm going to continue to send you just some additional resources via email so that you guys can get some more information on the home buying process. There's a lot that goes into it, so to kind of bundle that up into this particular webinar doesn't make any sense. So I'll just send you a couple of just resources to kind of get you thinking about what's going to make sense for you as a home buyer. Did you have anything else that you wanted to add?
No, I don't think so. I think give us a call or send us a message if you want to get some more information, and we're happy to help you explore all those options that are out there.
Awesome. Listen,
don't be afraid.
Absolutely. Thanks so much for watching, and that's it for us.
Thanks for coming.
Yeah, we appreciate you guys. All right, we'll see you next time. I don't know what the next webinar is going to be, but I'll keep you guys posted. Talk to you guys later. Peace.